Alright, this is Dylan. Welcome to my daily trading analysis video. Today is a Tuesday, 4th of November. Alright, so we're going to start off with the dollar against the Japanese yen. Let's go into the 4-hourly charts. We can see that yesterday itself, when the market just started, there was a gap up, and right now what we are seeing is that the gap is still not closed, and instead the price appreciated even further and break above this level at 112.99, which is one of a exhaustion level measured by the Fibonacci expansion, and finally it is about to hit the final exhaustion level at 114.72. Alright, so in this case, if we zoom in a little bit into the 1-hourly chart, we do see that price has been supported by the 20 moving averages since the great appreciation after the BOJ, the Bank of Japan's monetary policy, or rather the FOMC statement. So what we are seeing here is that price is being supported back at the 20 moving averages, and therefore if there is a confirmation forming right after this reversal candle, then there might be a chance to go for a long opportunity all the way to the top, to the final exhaustion level. That would be still a good 90 over pips of profit. Alright, of course your stop loss you can just set about 20 pips below the low of this reversal candle. Okay, so that is for the dollar against the yen. Next we shall take a look at the euro against the US dollar. So a very quick recap is that there was a falling trend channel, as you can see, coming down to the bottom, came out again, got resisted at the top, and it fall, and then it fell, broke below the falling trend channel and touches one of the final exhaustion level at 1.2443, and then it rebounded back to the bottom of the previously broken falling trend channel. So zooming into the 1-hourly chart, we can see that there was a reversal candle over here, just right below the bottom of this falling trend channel, and therefore again we can wait for the confirmation to go for the short again at this point of time. Of course, the first level is back to the previous low at 1.2443, followed by that will have to be measured again, but if you're looking at the all the way to the downside, it can go as low as 1.2200. Alright, but if it breaks, if it appreciates further and went back into the previous falling trend channel, then with a Fibonacci retracement being plotted over here, we can wait for price to retrace back to the retracement level of 38.2%. So that's for euro against the US dollar. Next we shall take a look at the pound against the US dollar. So what we are seeing is that price has been consolidating, moving sideways, still being supported at the support level of 1.5954. That was the previous support back in the beginning of October itself, and we are seeing that price might be able to appreciate from this point onwards. As you can see, there's a lot of reversal candle at this support level, and it seems that confirmation is about to form right here. Alright, this is the 1-hourly chart. So if it appreciates, then the first, I guess the take profit level will be all the way back at the 200 moving averages. We can also plot a Fibonacci retracement to see. Yep, this is somewhere at the retracement level of 30.2%. So if you're not comfortable with with buying this currency pair, then probably you want to wait for price to retrace back to 30.2% and look for a short opportunity from here. Alright, so that's for the pound against the US dollar. And next we have the New Zealand dollar against the US dollar. So there was again back to the 4-hourly chart, there was a falling trend channel after it has broken below the rising trend, the previous rising trend channel. And now what we are seeing is the price has broke below the falling trend channel, touches one of the exhaustion level at 0.7696, and then it rebounded back into the trend channel itself with a right. So back to the 1-hourly chart. We just want to see how much will the price retrace. So with a Fibonacci retracement, we can see that somewhere at the price of 0.7803, which is the retracement level of 30.2%. Right, we can see that there was a previous support over previous. It was a support here. We can see there's reversal candle over here as well. So this might be a good level to go for the short. So, well, end of the day, we have to wait for price to retrace further a little bit, right? And finally, I would just like to touch on the Australia against the US dollar. Just now in the morning itself, in Singapore time 8 AM plus 8 GMT, there was this retail sales and trade balance. Retail sales was good, but the trade deficit has widened a little bit too much, and therefore causing a swing movement in a whipsaw rather in at about 8:30 AM just now. So over here you can see that there was previously a rising trend line over here. So price has broken below the rising trend line and forms a falling trend channel in the 1-hourly chart. So it came all the way down, got supported, and retraced immediately after it touches the bottom of the falling trend channel, including the final exhaustion level at the price of 0.8658, and it starts to rebound. So later on there will be the Reserve Bank of Australia's bank statement and the cash rate. So for the cash rate itself, most likely it will remains the same, but take note that there might be a surprise that they might just cut cash rate at this point of time if they want to take this opportunity to weaken their currency further, right? Just right after the Federal the Federal Reserve the FOMC statement. Well, so there might be a small possibility for that, and if that happens, then of course we can see that Aussie will depreciate against the US dollar by a lot and break new low, right? If not, we are actually looking for price to retrace all the way back somewhere close to the top of this falling trend channel, or rather at the resistance level, at retracement level at 38.2%. Alright, you can see that it was previously a pretty strong support level over here at 38.2%. Alright, so that is for the Australia against the US dollar. And yep, that's all for today. So thank you for watching, and I'll see you again.